Mid-caps, SpiceJet has made its debut in the retail segment with the launch of its e-commerce portal called SpiceStyle, which is expected to help boost the ancillary business of the company, which is a very small portion currently. Ajay Singh, the Chairman and Managing Director, joins us now to tell us more about this venture. Mr. Singh, good morning. You've partnered with Amazon to sell SpiceJet merchandise. What kind of additional revenue can we expect from this?
SpiceJet's objective is to try and increase ancillary revenue wherever possible, and we sell some merchandise on board. The thought was that the merchandise that we sell on board, we should try and also sell through other distribution mechanisms, which is what we are doing. We have partnered with Amazon, and we will be partnering with other marketplaces and try and sell some merchandise and add to the ancillary revenue that SpiceJet currently earns.
Ajay, good morning. So what's the current share of ancillary revenue and what it is likely to be?
When we started this process of trying to turn around SpiceJet, ancillary revenues were around 5 or 6% of total revenue. This has since gone up to about 16% of the total revenue. And with the deals that we are doing over the course of by the end of this year, we expect that ancillary revenues will be closer to 18 or 19% of total revenue.
18 or 19%. Well, in Q4, there was a significant increase in fuel costs. I mean, I'm coming back to your 80% business. And there was a decline in yields, which impacted profits. But now fuel prices have come off. So how should we look at FY18?
Well, at this time, FY18 is looking better than FY17. But let's see how things go. I mean, at this time, the market continues to grow. As you said, cost is coming off a little bit. Yields are hardening. So hopefully we have a good financial year.
So how is the competitive situation currently, Mr. Singh? Do you see further pressure as far as yields are concerned? Because almost all of FY17 was spent with lower yields for the industry.
Competitive intensity always has been pretty strong, and airlines continue to add capacity, and it takes time, for adjustment of that capacity. We have to face the fact that India is a extremely competitive aviation market, and so all of us need to work to make sure that we fly the most optimum routes. We try and increase yield, we try and increase ancillary revenue, and we try and reduce cost. So that will be SpiceJet's effort. We've done pretty well so far in the last 2 years, and we expect that we will carry on that same trajectory this year.
Ajay, in the UDAN scheme, you are the only airline that's not taking the subsidy that the government is awarding for the 11 routes. Will you be profitable at 2,500 rupees a seat?
Firstly, that the price that you're talking about is for a limited number of seats on every flight. Obviously, we've done a great deal of work on these flights, and there is no flight that we will be operating which will not be profitable. The sectors that we are flying, it's almost unimaginable that there are no flights, to cities like Kanpur, that there are no flights to cities like Jalandhar. And from Mumbai to important port cities like Porbandar and Kandla, there are absolutely no flights. So, the flights that we've got are fairly premium flights, and we are fairly certain that these will be profitable flights for us.
Okay. Well, Mr. Singh, I'm a little stuck on fuel costs. With the focus on costs, reduced fuel costs, high ancillary revenue, how will you look at margins in FY18?
I don't want to give any forward guidance on margins, but let me just say that the company is looking very healthy to me.
Okay, so if the company is looking healthy, at least you can tell us what the occupancy trajectory of the company could look like?
Well, for the last 24 months in a row, occupancy has been in excess of 93%. This is something of a global record. The trends seem to indicate that this trajectory will continue in this financial year.
Wow, that's something. Thank you very much.